What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 21st of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got some pretty big breaking news, or at least it appears as breaking news, as it's tanking the market down about 8% for Bitcoin's price. And that is the supposed claim that there has been a double spend on the Bitcoin network. So I want to spend some time today to not only talk about what a double spend is, but also really answer this question, plain and simple, whether or not we've experienced a double spend on the Bitcoin network. And then also talk about what this has to do with price overall. So as you guys can see here from the chart, Bitcoin's down about a little over 8% here for the past day. Not in a full trading day, we're down 8%. Question here, though, is have we experienced a double spend? No, guys. We have not experienced a double spend on the Bitcoin network. And to make this claim that we've experienced a double spend, as it was starting to spread through the rumors of the crypto space, the crypto Twitter, and all the different outlets, media started covering instantly. They basically built up this narrative that something like a double spend, which is a massive security breach, has happened to Bitcoin, and it hasn't. I think it's wrong on so many accounts that people have just been going out and constantly claiming that, yep, it's official, there has been a double spend attack because we saw a tweet stating it. So this has been something that's been spreading the rounds here. Cointelegraph, a lot of great sources, again, out there on the space, still kind of building into this narrative that there's been a double spend, and it's not true. So let's go ahead first and talk a little bit about what a double spend is. So for those who don't know, a double spend basically means what it says. It's the ability to spend the same amount of money a second time. And the great thing about Bitcoin is that its first major achievement as a technology was being able, in a trustless way, to basically fight the ability to do a double spend attack. In this case, basically being able to spend the same money twice. So I wouldn't be able, in this case, to be able to spend Bitcoin 2 times. Maybe if I had like 1 Bitcoin or 5 Bitcoin or a fraction of Bitcoin, it doesn't matter the amount, that I wouldn't be able to spend it twice because we have this great chain or ledger on the Bitcoin blockchain that actually helps to prevent it through the combination of both blockchain technology and proof of work. Now, I don't have all the time today to be able to detail it. I don't want to bore you guys and talk for a couple 30, 40, 50 minutes to an hour to explain it all. But I want to go ahead and just dive through the story. I'll try to do the best visualization I can of explaining what really happened here. So basically, BitMEX Research, and again, you guys know I've already been really critical of BitMEX. I mean, this is just like the icing on the cake here for misstatements and spreading fun in the space. So stay away from BitMEX, generally speaking. It's a derivatives platform. And second off as well, like again, this is the kind of research that's coming out from them. So there was a stale Bitcoin block today at height 666,833. This is basically the 666,833rd Bitcoin block on the entire Bitcoin blockchain that's constantly running and working as intended. And what happened here was there was a race between mining pools. Now, for those who don't know, mining pools are collections of various people across the world who are, either be through ASIC miners or some type of mining equipment, basically contributing their hashing power and working together with other miners on the network to have a decent chance of getting a fraction of an overall reward for the miners. So, like, let's say, for example, in this case, in the story here, Slush Pool, which is a massive network of miners, against F2 Pool, actually beat out in a race against F2 Pool in this case. So they actually got the Bitcoin block reward. Now, the problem here is that there was a double spend attempt in this case, or not per se a double spend. There was an ability for a user in this case to spend the same amount of Bitcoin they had, or only $21 in this case, on the platform of BitMEX. So if there wasn't a double spend on the actual Bitcoin network in this case, then why was there a double spend on BitMEX? How was this able to be achieved? So let's go ahead and just try to detail it best as possible. There's a really good set of tweets here. I was looking throughout the descriptions and just trying to see if people could actually dispel this themselves. And this person here, Vedi in this case, explained it perfectly. It's actually a flaw on BitMEX's side. This is a problem with exchanges using lower rates of confirmations or using one block confirmation times in order to provide probably more of a convenient user experience overall. But let's go ahead and just try to visualize it here, because I think some people will have a hard time really getting this unless they can see it visually. And I don't honestly blame anyone. It's a bit complex because you don't really see the Bitcoin blockchain. You see your transactions getting confirmed, sending and receiving, kind of the basic stuff. So how do actual transactions get validated on the Bitcoin blockchain, similar to other blockchains? Well, first off, when a user, like this user, for example, broadcasted that they probably wanted to send Bitcoin out of the BitMEX platform. In this case, they basically submit a transaction to the Bitcoin network through thousands of different nodes across the world. And that transaction gets put into what's known as the mempool. So MEMPOOL. The mempool is like this big pool of people waiting to get on the train. They're waiting to get on the train to get their transaction validated. So it's a bunch of unconfirmed transactions where the nodes have found that, in this case, it looks valid. It looks like they have the balance when I look at my ledger. Okay, let's toss them in the mempool. All right. So they're in the mempool waiting to get in an actual block because they're not confirmed when they're in the mempool. They're waiting to get into a block from a miner who's going to use an excessive amount of computational resources in order to get a hash, a randomized number, that proves that their block is valid. So it means they put an economic cost into creating one of these blocks or discovering a block. And until they actually get the hash, in this case, to validate their block, they're pouring in transactions from users, and usually the ones that pay the highest fees. So they're putting it into the blocks here, and now they're all working in hopes here to basically put it on the chain. But here's a problem. We're working with a decentralized network. There's tons of different nodes hearing things first from other sources on occasions, right? Usually it tends to be that there's going to be one miner who discovers it, and then they get to add the next block, right? So generally in most cases, maybe miner 1 or miner 2, maybe F2 pool or slush pool would be the validator, and they would draw the next block of the chain, right? Their block would be added in, and they would get the Bitcoin reward and share it amongst their miners. Well, something else happened here. Instead of just adding another block to the chain, we had something that happens from time to time, and that's what's known as a split in the chain. So nodes on the network heard two different things. They heard miner 2, some of the nodes in this case, or some of the chain, heard miner 2, in this case, had gotten the reward, and some had heard miner 1 got the reward. So in this case, slush pool and F2 pool both had valid hashes at around the same time. And this caused something that we see from time to time. We've seen it on Ethereum. We've seen it on Bitcoin before. It causes a chain split. Now, this generally is not really a security risk overall, because what happens in the next block is that there is going to be a resolution sooner or later here, whenever the next block is confirmed, where inevitably these chains come back together. And then whoever gets the next block is going to get that reward. And it's going to basically bring things back in. The network is going to confirm either which one of these, the two different states here, are the valid ones or the wrong ones. There can only be one that's actually valid, in this case, added into the chain here. And overall, what we saw here is, in this case, F2 pool beating out, slush pool in this case, beating out F2 pool. So we can say that, for example, maybe this was slush pool up here. This is their block there. And then over here as well, this is F2 pool, and this is their block down here. This one was confirmed as the valid one. Sorry for my abhorrent check marks and drawings. This one was considered a cancel block. So overall, the network reverted back, and we are now back to our normal chain here. Things are back in business. So what really happened? If there wasn't a double spend of the Bitcoin network, who had the issue? It was BitMEX. And this is what the real security flaw here is in this case, is that they were utilizing one block confirmations or less than one block confirmations in order to validate transactions. So long as there were some nodes on one of the versions of the Bitcoin network here that were stating that, yep, this transaction is valid, the user has signed their private key, they sent it to the mempool, we put it in a block that's been validated, huzzah, in this case, they're good to go. Well, the user had attempted to send the same amount of funds twice, whether by accident or maybe just pure coincidence, or they maybe purposely tried to do this, of $21. And BitMEX basically allowed them to withdraw two sets of $21. So is this really a double spend? No, it's not a double spend, guys, because on the real Bitcoin blockchain here, only one of those transactions here are valid, right? Only one core transaction of $21 of Bitcoin was really moved over here. The only thing that might have happened here is that BitMEX might have done an additional withdrawal of $21 for this end user in order to, again, meet with his withdrawal request, because they basically used one block confirmations rather than basically doing something extremely simple, which is waiting for two block confirmations. So in this case, if they would have had a two block confirmation setting, only the first $21 withdrawal would have been confirmed here and here. It wouldn't have been confirmed in the previous block and this new block. So if they would have used 2 block confirmations, we've got the first block here. Go ahead and grab my drawing tool. And then the second block, got the first block here. You wouldn't have it on the second one. So this is what's so great about Bitcoin, like in the sense of like these decentralized networks overall, guys. Why they're so resilient is that if anything, it tends to be either human error or in this case, overall exchanges or platforms not really protecting against these small, rare events that can happen on the Bitcoin network. And the great thing is, as I mentioned, Bitcoin's back in business. It's back to doing exactly what it does. This happens on decentralized networks. They sometimes hear different things and they come to resolution. And it's generally speaking, which chain has the most proof of work in this case? Which chain has been able to put in the most work through miners or has the largest hash rate in this case? And the great thing above all is that, as Bitcoin's dipping 8% here, nothing's really changed. In fact, if we had a double spend attack in this case where Bitcoin was broken, I can tell you guys, price would be much lower than where it is right now. If this was a serious security breach, people would be printing Bitcoin like crazy or double spending Bitcoin and selling it on the market extensively. Because at that point, Bitcoin's broken and everyone would be taking that advantage to basically, claim that they have more Bitcoin or keep reusing Bitcoin and just selling it, right? So anyways, again, I digress here, guys. Overall, this is not a double spend attack. This is nothing to be worried about. And I think it's just coordinated FUD, if you will, or coordinated fear, uncertainty, and doubt from media outlets and large players in the space to basically cause the breakdown on this wedge. And it's real unfortunate because this is going to probably lead towards a greater correction now that we've broken through this technical pattern. There's a lot of significance with price coming down here at this high up in price. And if we go here towards the monthly chart, the weekly chart, for example, we can see here that now it looks very clear that we're going to be experiencing probably a multi-week correction. So thanks to all the people who basically made this claim. It's terrible, but stuff like this spreads into space very easily. So anyways, guys, I hope this provided some resolution. If you guys like, in this case, just kind of breaking down these more kind of technical topics and trying to dispel a lot of the fun in this space, consider dropping a like. It's always appreciated. This isn't here to spread more fear, guys. I'm just basically trying to make sure that above all, if you're seeing this headline and stuff, you're seeing it from a source that's going to dispel the falsehoods that are made here from a lot of parties in the space and getting a clear picture of what really happened overall. I probably didn't do 100% of a good job explaining the overall technical complication that had gone on, but it was entirely on the BitMEX platform. So this has nothing to do actually with the Bitcoin blockchain, generally speaking. It's working just as fine as it's worked for the last 10 years. And I'm really excited to, again, see what Bitcoin is going to continue to do over the next year, guys. All right, so that's it for today's video. Thank you guys so much for watching. I've rambled on enough, apparently, and I will see you all in the next one. Take care, everyone.